Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market again. So in general, market kept going higher with our short-term trading plan. This time, yesterday, you can see market hits the nearest trading target of the 1852. And from that standpoint, the minimum target of our reverse head and shoulders has been achieved. It doesn't mean that market can't go higher, but at this moment, well, at least we could say that the reverse head and shoulders on the 4-hour time frame chart is done. So, what is going on currently in general? In geopolitical situation, you can see that it's some relief stands around it. So the tensions were really very high and aggressive in the first few sessions, with this military moving in Eastern Europe and so on. So everybody was in tension, and currently it's a bit, so market has got the chance to just breathe out, and it's you can see in the same action on the Forex market as well. At the same time, if we'll take a look at the cross-market analysis, in general, overall situation stands not bad for the dollar. So on the, sorry, not for the dollar, for gold. On the weekly chart of the 10-year interest rates, we have the bearish butterfly, which potentially suggests that retracement might be a bit deeper, and that will be supportive. So decreasing of the interest rates will be supportive for the gold. With the dollar index, it also shows some pullback from the 618 resistance area. And finally, if we'll take a look at the real interest rates, you could see that the real interest rates also has dropped a bit more. So in general, in the short term background, we would not see any barriers for gold on other markets that could become the headwind for possible upward continuation. That's why, by taking a look at the gold in particular, so take a look on the 4-hour time frame chart. Right now, within the few hours, it makes sense to keep an eye on this performance. This is 4-hour time frame chart. We could get the bullish grabber. In general, at this point, when the market stands right now, it should not be any deep retracement. Definitely, market should not drop below these lows. This will be just a catastrophe for a short-term bullish scenario. Since this is upward continuation, guys, and market already stands above the 1.7 of this big butterfly, it means that theoretically it should be considered as an action to the 1618 target. And we understand why this currently pullback is happening. It's just because the target of this head and shoulders has been completed, and market shows the response to it. Yes, we have here some bearish divergences forming, but let's keep watching. Not always the bearish divergence becomes some vital pattern, especially when it's forming not at some significant resistance area. So keep watching for grabber here. This is the first moment that we're watching. On the hourly chart, with the reaching and completion of this butterfly, 1.7 extension and OP has been done, as we suggested, market stands in a retracement, right? So here was relatively strong upward performance. That is also suggests that market theoretically could keep going to the 1618. And 1618 stands at the same area, 1859. From that standpoint, I think that this conference might be the vital pattern for current short-term setup, because as I explained already, this market should not return back to the lows. If this will happen, do not consider taking the long position right now. Wait for more, because if this will happen, we could get anything else. For instance, it might be head and shoulders, deeper retracement or something of that sort. At this point, if market will right now drop below the 1830, it means that the short-term bullish context is done. So it will be broken. Only while market stands above this area, we could count on the possible upward continuation. And from that standpoint, the confidence area of the 1835, 1838 seems like a kind of the, not just the support, but also some kind of a signal line. So standing above this area keeps bullish scenario valid. Breaking it down means that the bullish scenario, short-term bullish scenario, probably will fail. So that's actually what we consider currently on the gold, watching for the support and watching simultaneously for the possible bullish grabber on the 4-hour time frame chart. If we get the both, we're getting the grabber and we're getting some response to this area some breaching support and the pullback, starting the pullback. Well, that will be more or less significant context for considering taking the long position with the target around 1860. So that's approximately what we will keep an eye on.